Hello and welcome to Kapital, the community of holders and seekers of African capital. I'm your host, JS, and as always, guys, before we start, we begin with the Cobb and Douglas production function, which is our guiding principle, our word of affirmation. This is something we have to dream about, think about all the time as it applies to all aspects of our lives, guys. On our way to make Africa great again is through economic strength and might. And guys, we need to produce more and in a more efficient way. So the topic of this article pertains to the total factor productivity, which is the change in output, not from input. So let's jump right in. AFC chief pushes to unlock billions from African pension funds. An article from BB George and Karen Strawhacker. And as always, Libby George is a London based journalist on the Reuters emerging market teams, and Karen is the global chief correspondent for emerging markets. But look at this fine gentleman, fine African gentleman. Samaila Zubair, chairman and CEO of the Africa Finance Corporation, speaks during a session climate change adaptation, finding appealing business models at the CEO Forum in Abidjan, Ivory Coast on Monday, June 13, 2022. So this is an older picture. All right, let's jump right into the article. London, March 10th. African Finance Corporation said it is accelerating efforts to mobilize the continent's own money for investments, which is actually the way to be. We need to finance our own development, guys. We shouldn't wait on aid, on lending, foreign lending. It should be from our own savings, and I'm pretty sure we have enough of them. And tapping investors in the Middle East and Asia as developing nations grapple with seismic shifts in geopolitics and funding flows. Samaila Zubairu, chief executive of the AFC, a development finance institution owned by Nigeria's central bank and other African financial institutions, said in an interview the lender is really ready to weather a world in which the United States and Europe cut financial aid and turn increasingly inward. This is also something that we should be doing as African. We need to be looking inward. This is a great opportunity, guys, as I was said in previous video. What the United States and President Donald Trump is doing right now is giving us African an opportunity to liberate ourselves and to finally gain our independence. So from there, I was actually curious about the African Financial Finance Corporation because, to be honest with you guys, I've never kind of heard of them, and I was kind of curious, and I thought I will share with you what is the Africa Finance Corporation. So the Africa Finance Corporation is a multilateral financial institution, and it focuses on infrastructure development, industrial growth, and economic resilience across the continent. So this is huge. I'm curious. I was curious to. This is the first time I'm learning about this entity, and it also provides project financing, advisory services, and structure investments to support key sectors like energy, transport, and natural resources. So the corporation is headquartered in Lagos, founded in 2007, with almost 45 members, African country and African financial institution, as we've read some central banks in there. So these are actually some of the elements I was able to gather from this entity. So what are the core functions? Oh, let me just hold on, guys. My bad. What are the? Oh my God, we need some circle. Core functions. What are they? So the company is involved in project finance and investment with funds large-scale infrastructure projects in energy, transportation, natural resources, and telecoms. One thing to mention that this company is focused on development. So if they fund your project, it has to be some sort of industrialization aspect behind it, or at the tail end of the funding that, or at the tail end of the loan that you're asking. It also provide equity investments and risk guarantees. I don't know if you remember on the first video we talked about infrastructure financing, and one of the element was credit insurances. For some loans, you have an insurance for default. So someone provide actually an insurance in case you don't have the ability to pay back your loan. So these institutions are very critical in terms of risk mitigation, as it provides some comfort to the lender that, hey, look, this entity or this country, if they don't pay, we are back them up. We are backing them up. And of course, as any insurance, you pay the premium to be covered, basically. Another element are the sectors of focus, and the entity focuses on energy and power with investment in renewable energy. You have solar, wind, and hydro, as well as thermal power plants. We have the example of the Cote d'Ivoire gas to power projects and the Senegal's wind farm. Another element is transport and logistics. Sorry, transport and logistics with funding for roads, railways, ports, and airports to improve trade. So everything is targeted to some sort of trade improvement or industrialization. In terms of natural resources, they support oil, gas, and mining projects that drive industrialization. As I was saying, they're not just gonna put you in a position to be a commodity exporters. They want you to actually industrialize that sector and you know add the value at home before shipping products abroad. The final industry, the final sector rather they invest in is telecom and technology, with investment in the broadband networks and data center. They participated in the Pan African fiber optic networks financing. Now, what are the funding sources of this entity? So the AFC secure funds through multiple channels. You have equity capital from member states. Our AFC is owned by 45 African governments, financial institutions, and private investors. And those entities contribute capital, and in return, AFC provide financing for infrastructure projects to those countries, and they get the interest back or dividend payback by the entity. Another element how they raise capital is through debt issuances. It raises funds, mainly euro bonds, so in euro denominated liability in global market. In 2021, they issued a 500 million euro bond that was oversubscribed. We say an issue is oversubscribed when there is more demand than the loan amount that you're actually trying to get. And in 2023, they issued a 750 million euro bond, and that one was also issued with a strong investor demand. And finally, the major projects that they've done so far. So, in terms of projects, they're very active. AFC is investing heavily in Africa's, power sector, especially in renewable energy and gas to power projects. We've talked about the Ivory Coast gas to power plant that started in 2023. AFC financed that project to, I believe it was 300 million. You have the Djibouti wind farm that was achieved in 2000 or started in 2022. It's a renewable energy expansion. AFC financing 122 million, which will provide 600 megawatt of clean energy. This projects here is in transport and logistic, the Gabon special economic zone, which is a trade and industrial hub. AFC invested 140 million in infrastructure for Gabon's infrastructure hub. Also, a notable mention is the Ghana. AFC provided 150 million investment in Ghana to export its transport network, improving logistics and trade. And in terms of natural resources, we have the Guinea bauxite and aluminium uh, project that AFC invested 200 million in, with the plan is to develop local aluminium refining. As I was saying, the this entity AFC focuses in industrialization. So they're not just going to take any project; they take projects that are actually geared towards development of the continent. So I was very pleased to know that this institution exists. I was also relieved to know that its funding, its the funds are coming from Africa. So it's a African funded institution with an African development focus. So I think this I think this entity needs to be more recognized. We hear about the AFG, we hear about the IMF, but those are the guys actually that matters. Those are the guys that are actually driving change, and that will bring us economic might, which is the goal of this community. All right, I just wanted to share that with you a little bit. So let's jump back into the article. The only thing we want to change is to get domestic capital more available for investment within the continent, Zubair said, which I totally agree. Guys, we need to stop our reliance on external capital. We need to be able to secure our capital and invest it at home. I'm pretty sure we have savings. We do have savings. It's just not efficiently allocated. That's why the situation we are in right now. Let's go back. We will accelerate our initiatives to mobilize domestic capital from African pension funds. Yes, exactly. African institutional investors to invest domestically, he said, adding that in the long term, some 15 to 20 billion could come from domestic pension funds. US President Donald Trump's America First agenda and cuts in US aid money could drain billions from projects in Africa. Guys, we shouldn't care, man. We should be financing our own project. We should find ways to finance our own project. This is the goal. This is, we need to find solution. This is what this community is trying to achieve, striving to achieve. European countries are also slashing aid funding, with Britain redirecting much of it to boost defense spending. So they're going to war. I don't know why Europeans are preparing for war. Nobody needs that. Even Russia doesn't need war. Why are you boosting your defense spending, Britain? Nobody is attacking you. You don't have an empire to defend anymore. I don't understand this uh, warmonger, I don't know, ideology that the European have, at least lately, and in their history. I guess it's in the gene. Africa's low saving rates and shallow markets have stymied effort to mobilize local pools of cash. I don't think we have a low saving rate. I just think that our savings are not properly, uh, you know, allocated first of all, but they are also not they are not centralized. Most people don't have a bank account. If they have cash, they put it in their house. That money needs to be redistributed, allocated efficiently through an efficient through efficient financial infrastructure, which we also already talked about in this community. So we don't have low savings. It's just that it's not properly structured and allocated. Shallow market that I agree in most areas we don't have capital markets that are efficient like there is in Nigeria, Africa, South Africa, and so forth. Maybe Ghana even have stymied effort to mobilize local pools of cash. Zubairi said the AFC, which deploys 2.5 to 3 billion each year, that's huge. 2.5 to 3 billion dollar each year will scale up fund allocation prudently by choosing projects other backers pile into. So they're choosing projects that are profitable with a good internal rate of return. Reach Nigeria's sovereign wealth fund, providing guarantees on local currency debt. The project has mobilized some 220 billion naira, 152 million, including investment from 21 pension funds, which previously invested almost exclusively in government debt. Okay, another stop that we're going to make here, it's about the pension funds. Uh, I'm going to present this graph here that I've put together. So first, let's start about the definition. What is a pension fund? A pension fund is a pool of money set aside by employees, or governments to provide retirement income for workers after they stop working. So as you can imagine, it's huge. You work your whole year, and when you go to retirement, you rely on your pension fund, to get you through retirement. So this is the definition of a pension funds. So what is the role? The role that I've identified. The first one is to stabilize the financial market. How do they do that? As because pension funds usually, not usually, most of the time are large institution. If you have the retirement of, I don't want to say it. Let's say you have the retirement, you're managing the retirement fund of all the public service employees. That's a lot of people for any country. We're talking about millions of individuals. So by stabilize, how do they stabilize financial markets? They bring stability to stock and bond markets by investing in the long term. Because they have a long term liability. I don't know if you're familiar with the asset and liability management, there has to be a match. If your liability is long term, your asset also has to be long term. Since the liability of the pension funds is the money that they're going to pay in retirement, so some years in the future, they need to make sure that the investment also matches the liability they'll need to pay at the tail end of the term or the maturity. Um, uh, I don't want to say maturity because we are humans, but you get what I'm saying. So that's the role. That's how they stabilize financial markets. They invest in the long term. And then how do they create jobs? Because that's also a big impact of pension funds. With the investment, they stimulate business expansion, employment, and innovation. They invest, they have money. As I was saying, they have liability in the future, so they need to invest in assets also that will pay off in the future. And those assets are most likely like roads, railways, airports that will provide cash flow in the future for the pensioners. So that's how they create jobs. And finally, they reduced government burden because let's face it, in Africa, most of the social burden comes from the government, even though the coverage is not universal for most countries, at least you know you see what I'm saying? For most countries, it's not universal, the coverage. So by reducing the government burden as a well-functioning pension system, it reduces the reliance on state funding welfare programs. So if the state is not responsible for your retirement, the pension funds can come over and the government can focus its resources towards, more government-related activities. So this is, in my view, some of the elements that are critical as pension funds for any economy. So now let's see how pension funds in Africa fare in general. So let's start with South Africa here. With the biggest endowment in total asset, they have 250 billion, which is the largest in Africa. And let's look at the type of investment that let's look at the asset allocation. You have here 45% equity, some of those equity, not some of those equity, most of those equity are coming from the Johannesburg Stock Exchange, JSE, the listed company, including banks, mining, and telecoms. They invest in 30% of the fund is invested in sovereign bonds, sovereign and corporate bonds, actually, South African sovereign debt. 10 to 15% in PE. In PE is private equity and infrastructure. I think this allocation has to be higher, as we've said, to create job and for stabilized financial markets, you shouldn't be investing. Oh my God, let me go back. Shouldn't be investing a lot in sovereign. Should be investing more in infrastructure and private equity because private equity are actually taking chances. They're there for innovation. So this should be higher for most of those pension funds in Africa. And 5 to 10% is dedicated to offshore investments in Europe, US, Asia, in terms of stock and bonds, all type of assets. Now, let's move on to Nigeria. Nigeria, they have a 20 billion funds, and the National Pension Commission, PENCOM, oversees multiple pension administration. So in Nigeria, they have a central administration that manages multiple. And look at their allocation, 70% in sovereign debt. How are you going to develop your country if 70% you invest in sovereign debt? You know, we all know that government in Africa, they invest for working capital. Sorry, not they invest, they borrow for working capital. They're not borrowing for investment, they're borrowing for consumption. which is, in my opinion, I don't want to say stupid because I'm not that smart, but it's not a good idea. When you have 15% invested in equity, uh, don't know. It should be more, it should be less in sovereign. When you have 70% of your portfolio invested in debt, so first of all, the return is very low. So I'm not sure how you're managing, that aspect of it as well. But anyway, I digress. I let them do their thing. That's what Nigeria do. I'm just here to report. Now you have Morocco with 45 billion. Uh, the key fund is the Caisse Marocaine de Retraite, CMR. The group invests 50% in bond, 50% in bond, 15% in equity, 15% in real estate, which makes sense as you know touristic destination. It makes sense for the pension fund of the country to have some hotels. I'm assuming some touristic infrastructure, and 10% is invested offshore. The next one will be Egypt. I just selected some of them guys that the data were most available. They have 40 billion for Egypt. It's the National Authority for Social Insurance, NOSC, that manages the funds with 60% in bond, 20% in equity, 10% in real estate and infrastructure, and 10% in alternative investments, including private equity and offshore assets. Then again, I'm not sure about that 60%, sovereign, though Egypt is kind of, I want to say, a more mature country in African terms, 20% in equity. Okay, infrastructure, and so forth. And the final fund that I was able to gather was Kenya, with the Retirement Benefits Authority managing 50 billion, 15. Oh, I mean, I think it's 15. It's not 10. My bad, guys. It's 15 million, 15 billion in total assets, with 45% invested in sovereign bonds, 30% in equity, 50%, 15% in real estate, and 10% in equity and infrastructure. Again, touristic country, makes sense for them to have like hotels or, you know, lodges in the Serengeti and so forth. So you guys let me know what you think about those countries and their investment. Should they invest more in those? Is this allocation right to you guys? I mean, for me as Africans, we should be more investing in like private equity and infrastructure. Private equity, those are startups, those are innovation companies with higher return infrastructure for economic integration and development. So pretty interesting. I just wanted to share that with you guys. You guys let me know what you think in the comments. Invested almost exclusively in government debt. Bayrou said he expects to launch similar programs as early as this year in Botswana, Angola, and Kenya. This is a kind of program that we think needs to be replicated at scale. He said, if we do programs like this, then you see a lot more billions available for investments, which is true. There's a lot of dormant money in Africa, a lot of dormant capital out there. People are just investing in real estate. You see buildings going up everywhere, every major cities, but you don't see plants, you don't see factories. That's actually how you drive economic growth. That's actually how we achieve this output. By investing the capital towards the most efficient uses. Pension funds had also placed money in the Infrastructure Climate Resilience Fund, boosting a 52 million commitment from the European Investment Bank, he said. Investors from the Gulf and Europe are also looking to place money in other AFC projects, such as Arise, integrated industrial platforms, which designs and finances industrial projects. Trump has yet to publicly signal his plan for U.S. investment in the Lobito Corridor, a railway project linking resource-rich Democratic Republic of Congo with Zambia and Angola's Atlantic port of Lobito. The Chinese have their counterpart on the eastern side of the continent. Former US President Joe Biden visited the site during his inaugural and only trip to Africa. You see, Joe Biden, he only came to Africa for this project, which is huge, which is going to be like a resource rich development. So makes sense to for him to go there, but to be the only trip that you make to the continent with the future that we represent, Sleepy Joe, I'm not sure if that's a good idea. Zubairu said he was confident Trump would see the value in backing the corridor, though it was a strong, bankable framework that will move forward regardless. Exactly. It's a bankable framework. They're going to make billions out of this. He's not going to back out, especially a business oriented president like Trump. Nah, man. It makes so much sense to continue that project instead of stopping it. All right, this is the end of the article. The sweet one, interesting one. Just wanted to share with you guys my discovery of the AFC, the African Finance Corporation. I hope the content that I share with you was insightful and interesting. And yeah, I'll see you at the next one. Bye.